and welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, it was a marvelous Monday, so to say, for the markets, given the fact that the Nifty managed to reclaim that 18,400 mark, even though we just ended a shade below that level.
Yeah.
But, even the mid and small cap indices were upbeat, with the mid cap index gaining somewhere around 0.7%. If you look at the sectoral movers, of course, let me talk about the Nifty Bank Index. That was just about, it was almost there. It had, it managed to come very close to its a life high of 44,151, but just missed it by about 1 or 10 basis points or thereabouts. But Nifty Realty Index managed to hit a 7-month high, in fact up 4% or thereabouts. Autos were also fairly upbeat, led by the likes of Tata Motors and Hero MotoCorp. Among the top Nifty gainers, you had the likes of Hero Moto, Tata Motors, as I mentioned, Tech Mahindra, ITC ahead of its earnings this week. And on the losing side, we had few losers today, but Cipla, BPCL, Grasim, Divi's Labs and Maruti were among them. Yatin, what are you picking up from the mid-cap space?
So, clearly, if you look at the markets, quite healthy advance decline ratio, little better than 1:1, and the Nifty at 18,400. Probably a lot of the market traders were in disbelief, but we have a very stupendous rally coming in for the markets today. Real estate stocks were flying. In fact, any real estate stock you pick up, be it Sobha, be it DLF, be it Oberoi Real Estate, all of them were moving in trade on the back of good data, good pre-sales and good results. So, there was a mix of, good real estate sales which were pushing stocks up. Zensar Technologies, after a strong quarter, the rally here continues. Stock was up 13%. Mahindra Life, LG Equipment also, being the momentum boys. Obviously, today the Supreme Court had postponed the Adani matter with regards to the SEBI extension to really come at a conclusion of the probe by 6 months. That particular hearing has been unfortunately adjourned. But if you look at Adani Group stocks, be it Adani Enterprises, Adani Total Gas, Adani Transmission, we were looking at some serious profit taking which was happening in all of these stocks. In fact, Adani Total and Adani Transmission, both of these stocks were down 5%. DMart, after a weak fourth quarter wherein the gross margins contracted by almost 1 percentage points year on year, was down 4%. So, some profit taking there, and CEAT also down by about 5% after the strong quarterly earnings and some profit taking thereafter.
Right, with that, let's take a look at some of the stocks that are on our radar this afternoon. Starting with Tata Motors, of course, firing on all cylinders. This stock is perched at its 52-week high. In fact, on a YTD basis, it's up 37%, and from its life high, it's just about away 15% or thereabouts. What's working for this stock? Well, stellar set of numbers for the fourth quarter, turnaround in domestic business, JLR business doing extremely well. In fact, if you look at the CV business, the EBITDA margin has come to a 17-quarter high, Yatin, of 10.2%. Yeah. In fact, it has also trimmed its debt, and that is something that is working well in its favor. Net auto debt has reduced by 13,800 crore on a quarter-on-quarter basis, and the India business net debt is around it's the lowest in 15 years. Now, the free cash flow generation guidance that has been given by JLR has proved to be a very kind of a sentiment booster when it comes to this stock. The company has said that it's confident of generating free cash flows to the tune of £2 billion in this current fiscal, and that is something that has got the street extremely bullish on the stock. In fact, most of these brokerages have come out with a positive buy rating on the stock and have actually pegged the target price above that 600 rupee mark. Remember, the life high for the stock is 605 rupees.
Correct.
Aggressive focus on EV is another point that analysts are saying would be a key key for re-rating of the stock, given the fact that the company has announced capex to the tune of 38,000 crore rupees, wherein 30,000 crore will go towards JLR and the rest 8,000 will go towards its India business. For its India business, the CV recovery is mainly because of the government's thrust on infrastructure going forward, and in fact PV businesses has also staged a turnaround on the back of demand for EVs. When it comes to JLR, of course, it's the visibility on the chip issue that's improving, and that is something that has led to such a strong turnaround for the JLR business. So all in all, things looking extremely good for Tata Motors. the sentiment has been bullish right from the start of the year. In fact, some of the, if you look at the flip side, maybe you can say that the return ratios aren't all that great compared to its peers, but the US and European recession, if that comes by, maybe that could prove to be a little bit of a dampener when it comes to demand. But otherwise, demand picture is also looking pretty healthy, be it from the Chinese markets, US markets, European markets. So things, moving pretty fast and pretty good for Tata Motors.
In fact, most of the auto stocks are doing well. And continuing the auto theme, let's also talk about VST Tillers and tractors. Now, this company is into powertrains and smaller tillers, which are basically replacements for tractor for smaller and marginal farmers. Company also has a very strong presence in the tractor business. Now, if you look at the tiller space, the company has a very big market share, and the tractor market share is close to 7%. But what is the reason why the stock went up 10% is the management commentary. Now, analysts believe that there could be some further legs to the rally on VST Tillers, because the management has guided for 3,000 crores of sales by FY26, which means that from the current run rate of 1,000 crores, the company is looking to do 3 times of revenues in 3 years. Which probably moves into a revenue CAGR of 40% from here on. So strong growth is what VST Trailers is expecting. In fact, they are also guiding for a margin band of 11 to 14% or 11 to 13% thereabouts, which again could mean that the company could create some significant strong cash flows and EBITDA from the current operations. Let's see how does the company do. It's debt free, and the management has given aggressive growth targets, and probably the stock is away by almost 15-20% from the life high. It remains to be seen if they could meet that particular price point, given the aggressive target on the revenue front.
Right. For VST Tillers, I think we also need to see how this whole rural demand recovery plays out, given the fact that we had a delayed rural recovery in the wake of all these heat waves and also concerns over El Nino. Let's also talk about the other stock that's on my list today. It's DMart. Yatin has already mentioned that the margins have missed estimates. In fact, stock has not been doing all that well, down 30% from its peak, and on a YTD basis, it has shed somewhere around 13% or thereabouts. Of course, margins dropped 100 basis points, and it missed street estimates. In fact, its FMCG and staples end of the business continues to do better than the general merchandise and apparel business, which, mind you, is still below pre-COVID levels. It was somewhere around 27% of total sales pre-COVID, but now it's somewhere around 23% or thereabouts. So it's still got a lot to catch up on. DMart, as per so to say, has 3 categories: foods, non-foods, and general merchandise. Apparel business has been on a downward trajectory ever since 2019, and fall in discretionary spends is something that is hurting this business pretty bad. And add to that the competition from Reliance Retail. The number of store additions for DMart has been how much, 171 stores since 2019 and till about FY23. But for Reliance Retail, that company has added 3,300 stores just in FY23. So that stiff competition is something that is kind of hurting DMart. And aside of that, the sales per square feet has also declined.
Yeah, they've declined,
and it needs to ramp it up in order to come back to good growth trajectory. Aside of that, I think the shares are trading at pretty expensive at current levels, given the kind of growth it is handing in. But the good part is that it has a loyal customer base, because all those food and non-food category, they are available at cheaper rates in DMart, right? So it has a loyal customer base. But what it needs to do going forward is to grow its revenue and improve its product mix. It needs to improve its sales per square foot, and it needs to accelerate its pace of store addition. Unless it does that, things could look a little rough for DMart going forward.
That's the talk of DMart, but today the stock of the day was DLF. Very strong earnings, good guidance, and overall, if you look at the brokerages, they have raised targets. In fact, today JP Morgan has raised the target on DLF to 510 rupees per share. The stock ended up 7% higher. FY23 pre-sales have been quite strong. In fact, the free cash flow, is close to 4,200 crores. And if you look at the office rental business and the land development business, both of them are firing on all cylinders. So if you look at the core business of construction, it is doing well, demand is strong. And if you look at the overall, residential market, it has been quite buoyant, especially in the NCR region where DLF is a market leader. And overall today, we had various reports from agencies like Anurag which point that the demand still remains strong, and overall the pre-sale which most real estate companies have done, they could be sustainable moving ahead. So overall, quite a good number from DLF, good earnings and good conference call, probably because of which the market was quite excited as far as this stock is concerned.
Right, Yatin, and don't forget things are looking up for rate sensitives given the fact that the RBI
Yes.
doled out a pause at its last meeting, and the recent inflation data only points to the fact that we could see look at another pause in the June policy, and thereafter a rate cut maybe in the second half of the year. So things boding well for rate sensitives, including realty stocks. Well, with that, we have come to the end of this edition of Closing Bell. If you have any comments, send them in to us in the comment section below, and do follow us on our social media handles. But for now, it's a goodbye from me and Yatin. I'll be back with the markets at 8:30 a.m. tomorrow.